Hey, JJ here. Welcome back to the Art of Value. So today I thought I'd give some market commentary, market and stock commentary, because the last couple of episodes I've been talking about kind of in-depth things. The last two episodes were about AI, my research in AI, and what's going on there recently, catching up with that and diving deep. And before that, two episodes about boom and bust market bubbles, which I enjoyed doing. So it's been a while since I've sort of in the podcast caught up with what's happening in the market, even though I've been following it. So we'll just go through that today. Of course, you'll see the big news. The big news in the last day or so has been Elon Musk buying a 9.2% stake in Twitter. So after as you'll see, he recently polled more than 80 million followers on Twitter, Bloomberg says, asking them whether the social media platform adheres to principles of free speech. And then it was revealed that he bought the stake, which I think was around mid-March. I haven't looked into it that deeply, but I think he already knew that he had the stake when he was talking about that. So what will happen? I don't know. I've analyzed Twitter before. I've never owned it. I've been using Twitter for a long time since, as I've said before, since 2007. Not on the Out of Value account. That's reasonably new, but under a personal account, I go under the name JJ Projects quite a lot in various places, and so I've been using it since 2007, following Jack Dorsey's work. And now Elon Musk owns it. So what will happen? Will he make it? Will he finally make it work as an investment? Because it really hasn't. Let's see what happened. So the share price, of course, leapt after the news of, I think people who follow, let's call them fanboys, Tesla fanboys. I was asking today on social media whether I wonder if those people will just immediately buy Twitter because Elon's involved. It's the only other public company that has a stake in that I know of. So they're kind of, I think, people who are keen to buy anything that Elon's involved in, kind of waiting for Neuralink, SpaceX, and Starlink to go public. But Twitter's jumped 54%. If you're just listening on audio, I'm going to explain what we're seeing on the screen. 54.48% since March 11. So that was before, I guess it was around the time Elon started buying. So it's jumped, but since I analysed it, I decided not to invest. It was actually in 2020, I think, when it started to take off, and I kind of missed the boat. I thought it would be, I thought it was undervalued back then, but I decided not to, and then it's had a big crash back to down below what I was going to buy it for. But I'm not going to get on. I own Square instead, Jack Dorsey's other company, which I think he's focused on. I like his work a lot and what he's been doing, but I think he's more. I think Square, his second attempt is going to be the better company, I think, anyway. But I mean, if you look at the chart here, 256.75%, it's gone up in the past 5 years, Twitter. So it hasn't really been that bad of a performer, even though it had a huge downward trend after from early 2021, like other tech stocks and emerging tech stocks, although it's not not exactly a new stock. And if you're listening on audio, on the screen I've got a tweet that I found funny that I posted in a kind of a Facebook investment club thing that I comment on quite a lot. Hatch Investors Club, which is a New Zealand brokerage that allows trading in US stocks. So I've said further vertical integration. The marketing department this time is a joke, and it's a tweet, somebody else's tweet that says, "Outstanding. He is securing the raw materials which drive Tesla's share price," which you could be argued if Tesla doesn't do any advertising, doesn't need to, but Elon's Twitter stream is a big source of marketing, social media marketing. Anyway, it'll be interesting to see what Elon. I believe there's news today that he's going to be on the board. So it'll be interesting to see if there's any shake-up or what's going on. And there has already been a shake-up of the board, which was aimed at ramping up advertising, and Jack was out, and so far it hasn't really. I mean, there was enthusiasm there along with other tech stocks, but it hasn't really done that much. So anyway, I really like the service. I'm on there in my investing profile as the out of value. If you want to follow along there or connect on there, let's see what else we got. Oh yes, the China stock situation. I mean, I own Barber and Pinduoduo, which I bought them on the way down, and they went down further. The dip kept dipping, which is fine. But have we gone past the moment of maximum pessimism when I think Barber was down to what was it, 75? Let's see. So it's actually up. Barber is up, for instance. I mean, there are lots of other stocks, of course, but 44.61% since March 15th, which was the low. And so the news kind of is turning of maximum pessimism. It could be. I mean, who knows? We just don't know, right? But the news this week was that. I mean, I said myself as a comment. So it sounds to me like they don't want companies to be delisted from the US. So this is news from FT Financial Times. The Chinese Securities Regulatory Commission, Beijing's top financial watchdog, said on Saturday it would change confidentiality laws that prevent the overseas listed companies from providing sensitive financial information to foreign regulators. The CSRC said that its existing rules, which were last updated in 2009, had become outdated. It is the most significant move yet by Beijing to try and prevent Chinese stocks from being delisted in the US. And the headline there is China changes audit secrecy rules in bid to stop US delistings. So the delistings wouldn't actually happen theoretically until like 2024. So there's politics going on there and meetings, and I think they don't want them to be listed, and there's a lot of fear. Like on social media, there are people on the side of China's uninvestable, and I think was it Morgan Stanley? I can't remember, who sort of bottom ticked, saying that it's uninvestable, and it's been going up ever since. So will there be a recovery? We don't know if there'll be any more good or bad news, but I'm long term there, and we'll see what happens. And so far, it's interesting that the US market sort of had not a great beginning of the year, first quarter, and the China market's actually sort of rebounding from the depths, from the very depths. All right, moving on. So I listened to an earnings call this week. On Twitter one morning, I saw. I'm not a RH shareholder. I did look at the company for about a week, again in 2020, when after Berkshire Hathaway bought some, I think it was. Yes, it must have been. So why I like to reverse engineer, saying why did they buy it? What's going on there? And I can't remember, but I think I didn't like the debt. Didn't like all the debt they had. But they've had their prices rocketed since then. But it's been going down lately. I think I haven't actually looked at it exactly. Can't tell you right now, but it has been going down a lot. But it was a really interesting call because the CEO. Well, I'll read you this. The long Q&A part of the RH earnings call this week was really worth a listen. They are brutally honest about seeing change that indicates economic trouble ahead, already reflecting in what's happening in the business after this reporting period. So they had a great quarter. The luxury, if you don't know, RH is a luxury furniture brand, and seem to be moving into other areas if their call's anything to go by. Like they're talking about like a jet, chartered jet, and boats, luxury boats, and having events and things like that. And they're the first shop or one of the luxury shops in the UK that they're working on is like an old country style mansion that is going to be a shop with a luxury experience. I believe they have cafes. I'm not in the US, so I haven't actually been to a shop, which is one of the reasons that I wasn't that interested. I would like to go into one of the shops and have a look and experience what it is. But anyway, they've been doing well, but the CEO's been there for 22 years, and he basically said in the call that it's kind of the worst drop off and the biggest drop off in customers he's seen in 22 years, or the fastest drop off, and the guidance was that they're seeing 10 to 12% customer drop off just since they reported. So this wasn't in the reporting season. This is what's coming up, and he was saying the Fed's behind the ball and on interest rates, and he was pretty forthright about that. And I'd recommend listening to the call because is this in terms of the economy, is this where it's heading? He sees bad things ahead, which is and he basically saying there's a recession coming, he thinks. And they're seeing supply chain issues still, rampant inflation, runaway inflation, I think he called it. So it's worth a listen. It's entertaining, but it's also, is it a sign of things to come? I mean, they're at the sort of coalface of consumer demand, right? So it's interesting. All right, what else? Okay, I watched this video that popped up in my feed from Brian Feroldi, who's with Motley Fool, and he was talking. He used ARKK's results. What I said in my post about it was a video from Brian Feroldi, who basically says stay the course. He uses the historical example of Peter Lynch, very high returning growth fund and others, where the majority of his investors didn't actually do well at all, even though the fund did very well because they bought on upward momentum and sold in fear on downward momentum. Classic buy high, sell low, buy and hold through thick and thin is easy in theory, difficult in practice. And I said I'm not an investor in ARK, but I do hold a few of the same companies, a couple, which I think is Spotify and Square, I think. But I didn't buy them. I didn't buy them at the highs or anything like that. I don't know. It's an interesting but strange comparison perhaps because they're kind of quite different. Peter Lynch, very different from ARK Innovation. So the video is titled "An Urgent Warning for Cathie Wood Investors," and he's basically saying stay the course because he gave an example of buying another fund near the highs and getting slaughtered on the way down. So, and ARK has kind of had a really rough run the last year or so. It's down. I've got it on the screen, 57.54% right now, and it's at 66, and I think it got down to 60. So it's a big drop off. But over 5 years, which Cathie always talks about, 5-year timeline, they're up 177%, which is not bad. I think that's like over 20% CAGR. So we'll see what happens if it just drags along the bottom for a long time as interest rates rise, or whether it goes up from here. It's had not a bad run. Okay, I think I'm going to leave it there because I don't want to make it any more than 15 minutes. Even though I've got more, I might do a separate video. So that's it. That's my commentary of what's been happening lately. And if you're watching on video on YouTube, please like the video if you liked it, and subscribe. Tickle the like button, as they say, and not smash. Just tickle the like button and subscribe and notifications on. And if you're watching video on Spotify, follow along other services. Follow and subscribe for more videos. Thanks. See you next time.